Welcome back to Explain the Charts, where we break down the market, one chart at a time. Today, we're taking a look at Amazon, the stock of one of the world's largest e-commerce companies, Amazon. But we're not just looking at the charts, we're also factoring in recent news and events. In the past day or two, we've seen headlines about Amazon raising wages and offering Prime membership as a perk to warehouse workers. This news has been met with mixed reactions, with some analysts suggesting it could be a sign of a stronger economy and more spending. However, others are concerned about the impact on Amazon's margins. Let's take a look at the daily chart to see what kind of impact, if any, this news has had. Right off the bat, we can see that the stock price has been on a strong upward trend in recent weeks. However, it appears to have pulled back a bit in the last couple of days. There's a possible correlation between the news about wage increases and the recent pullback. Perhaps some investors are concerned about the company's profitability in the short term. Now let's zoom in on the 1-hour chart to see if we can identify any short-term trends. On the 1-hour chart, we can see a few interesting things. There's a noticeable dip in price around the time that the news about Amazon's wage increase was announced. This supports the idea that the news may have contributed to the pullback. However, it's important to note that this dip wasn't incredibly significant. The stock price has since rebounded somewhat. This could suggest that investors are not overly concerned about the news in the long term. Now let's look at the 15-minute chart to see if we can get a clearer picture of the most recent price action. On the 15-minute chart, we see a very recent spike in price. This suggests that the stock price is currently in a bullish phase. It's too early to say if this is just a short-term move or if it's the beginning of a new upward trend. But it's certainly a sign that investors are optimistic about the stock at this time. Let's take a closer look at the one-day chart and examine the recent range of candles starting from around 2 weeks ago. The stock price has been trading within a defined range, with clear support and resistance levels. This range is marked by the lows of around 175 and the highs of around 190. This range is an important point to keep in mind for any trader, as it represents the potential boundaries of the current trend. If the stock breaks through the upper resistance level, we could see a significant surge in price, pushing it towards the 200 level. On the other hand, a break below the support level could signal a more bearish trend. The stock could then potentially test the 160 level, which was a previous support level. It's important to watch how the stock reacts to these key levels in the coming days. Let's switch back to the 1-hour chart and zoom in on the last 24 hours to see how the price is reacting to the key levels. We can see that the stock price has been hovering around the 188 level for the past few hours. This could indicate that the stock is consolidating after the recent pullback. It's possible that the stock could break out of this consolidation phase in either direction, making it a potentially volatile period for traders. If the stock can break through the resistance at 190, we could see a renewed bullish push. However, if the stock fails to break through this resistance and instead falls back below the 185 level, it could signal a bearish trend. It's important to watch how the stock reacts to the 185 level in the coming hours, as it could provide a signal for traders looking to enter or exit a position. As for the 15-minute chart, we see a recent spike in price as we just discussed. This surge in price could be the result of a short squeeze, where traders who are shorting the stock are covering their positions. It could also be a sign that investors are becoming more bullish on the stock. However, it's important to remember that this spike could be short-lived. If the stock fails to sustain this momentum, we could see a pullback. It's important to watch for how the stock reacts to the recent highs around 190. A break above this level could signal a stronger bullish trend, while a failure to break through could lead to a retracement. Looking forward, there are a few key things to watch out for. The most important is the upcoming earnings report. This report will be a crucial event for the stock, as it will provide investors with more insights into the company's financial performance and future prospects. The market will be closely watching the report for any signs of weakness or strength in Amazon's business. If the earnings report is positive, we could see a significant surge in the stock price, breaking through the 190 resistance level. Conversely, a disappointing report could lead to a significant sell-off. In addition to earnings, the broader market conditions will also be important to watch. The stock market has been relatively volatile in recent weeks, and any changes in sentiment could have a significant impact on Amazon. A bullish trend in the broader market could provide support for Amazon, while a bearish trend could put downward pressure on the stock. Overall, the current price action of Amazon is mixed. The stock price is in a consolidation phase, and it's unclear which direction it will move next. Traders should be cautious in the short term and watch for clear signals before entering or exiting a position. It's too early to say whether the recent news about Amazon's wage increases and Prime membership perk will have a lasting impact on the stock. Only time will tell if these changes are a positive or negative development for the company. Remember, trading involves risk, and it's important to do your own research and consult with a financial advisor before making any investment decisions. I hope this analysis was helpful and informative. Stay tuned for more chart breakdowns and market insights. Thank you for watching Explain the Charts.